We're more than a full month into 2025 and the stock market has still been relentlessly rallying higher. Okay, apart from two recent short hiccups, first of -2% and yesterday's 1% drop, due to worries about DeepSeek, a more efficient AI model from China, and just a few days later, Trump imposing tariffs, which have now been delayed, at least for Canada and Mexico. Even with all of that going on, global ETFs are sitting at or near all-time highs once again, at least in euros. Which is especially impressive considering one of the largest companies by market cap, Nvidia, is down as much as 15.6% since the start of the year. Since we're close to record highs, as usual, a growing number of people are starting to wonder if they should wait for a long overdue pullback before investing, especially larger amounts. As it turns out, I was in the same situation just 2 weeks ago, as I had a large sum to invest due to some rebalancing I did with another asset class, crypto. I'll show you exactly what I did and how all of my investments performed up to today, February 4th. You'll also find out if I'm changing my investment approach based on what's currently going on in the markets. And lastly, since the ECB sadly decided to lower interest rates in the Eurozone further, we once again need to discuss how this impacts high-yield savings accounts like Trade Republic and Euro money market ETFs. Let's begin with stocks in the form of low-cost ETFs, where the vast majority of the portfolio I share with my wife is invested. In my personal opinion, fears in the markets around new tariffs being imposed by Trump on the US's trade partners will be short-lived, as I believe they're only being used as a bargaining chip. I'm confident they would be removed as soon as they start hurting the US economy or its stock market. So in my opinion, these are not worth worrying about and could actually represent good dip buying opportunities whenever they occur. I'm not trying to say you should try to time the market, by the way, as that rarely works out. The thing is, there will always be something to worry about. It never feels like the perfect time to invest. I can honestly tell you that from my personal experience as an investor since 2017. This image by Ritholtz Wealth is a great illustration of all the crazy things we've gone through since 2009 alone. And yet, here we are, sitting and waiting on the sidelines would have cost you a lot of money, in comparison to regularly contributing to your investments and staying invested throughout this period. Getting back to our own investments, our main ETF, covering the FTSE All-World Index, continued its rally in January, finishing the month up 3.35%. Now, my wife and I are usually able to invest a combined 4,000 to 5,000 euros per month, thanks to our high savings rate and our above average income. Last month was an exception. That's because I sold 35,200 euros of crypto from the end of December to January 19th to rebalance with the core of our long-term investment strategy, ETFs. I'll tell you exactly what I sold and why later in the video. As a result, we ended up investing a total of 36,267 euros into the accumulating Invesco FTSE All-World in January, as you can see here. Which means that as of February 4th, our ETF portfolio is sitting at 463,000 euros with a return of 2.2% so far in 2025. As for our average rate of return since we started investing 8 years ago, we're currently at 11.05% per year. And before you ask, no, I didn't time these purchases perfectly. I'm not good at market timing either. After moving this larger amount we had to invest to my brokerage accounts on Interactive Brokers and Trade Republic, I simply executed 2 manual purchases on Trade Republic on January 20th and January 24th, as well as 3 automated daily recurring investments on Interactive Brokers, since the 0.05% trading fee will be the same anyway due to the larger amounts, and 2 manual purchases where I tested out the Interactive Brokers desktop app. I'll talk about that in more detail in an upcoming video, as it comes with useful features that ensure you pay the lowest possible fee when placing direct orders as well. And while that worked perfectly in the first order, I ended up making a small mistake in the second one, which ended up costing me an extra €1.47 in fees. Oh well, this sort of stuff happens when you're too focused on simply recording your screen, while you have a 2-year-old asking for her daddy to stop working in the background. By the way, you can find my links to both brokers linked down below in the description, which is a great way to support me if you'd like to. Next, as I mentioned in the intro, the ECB sadly cut euro interest rates again. Within only 8 months, the ECB rate has now dropped from a juicy 4% to 2.75% per year. While that's still way better than the 0% or even negative rates we have all experienced for way too long in Europe, it obviously still sucks that we're now getting less interest on our euro deposits. And I fully expect this rate to drop further, perhaps below 2% by year end. end. Since my wife and I want to eliminate risk as far as possible when it comes to our cash reserves and emergency fund while remaining flexible, we're still using the German bank and broker Trade Republic to earn interest on our money, as they pass on the exact ECB interest rate they receive directly to their users. The recent rate cut also means that popular money market ETFs, like the Xtracker's Euro Overnight Rate Swap, will be returning around 2.75% per year going forward. Anyway, in January we earned a total of 53 euros in interest on Trade Republic, plus 15 euros via the 1% Saveback using their card for our expenses. And if you're based in France or Italy, you'll be happy to hear that they're now able to take care of taxes for you as well, in addition to German investors. You'll get notified and receive a new local IBAN when it's possible in your account if you live there. I also know that they're close to offering this in some other countries as well, including Austria, where I live. I'm really looking forward to that, and I'll share all of the details once I'm able to test it myself. Alright, let's get to my small high-risk allocation to crypto, which, as of last month, basically only consists of Bitcoin. As I mentioned in previous videos, I wasn't feeling confident holding Ethereum anymore, so I stopped adding to it in June and sold all of it except for 2 ETH, which I'm holding on to just in case, from the end of December to January 19th. That was a total of 35,200 euros, which I moved into a low-cost ETF covering global stock markets. As a result, I was able to lower our crypto allocation to align more closely with our 10% target, as it had grown larger than intended over the last year. Okay, now let's see how Bitcoin has been doing. As of February 4th, Bitcoin is up 6.5% in 2025, but we've been seeing a ton of volatility, which is nothing out of the ordinary for this high-risk sector. February tends to be one of Bitcoin's strongest months historically, especially at this point in its 4-year cycle. So it will be interesting to see if history repeats itself. And while having a small allocation to crypto is definitely not for everyone due to its high risk and unpredictability, I am bullish about Bitcoin going forward, and I do expect it to do well this year based on its previous cycles. Now, you may be wondering if we're changing our investing strategy based on what happened so far this year. After all, there's been a ton of uncertainty in the markets ever since Trump's inauguration as US president. Honestly, who knows what he's going to announce next? Well, sorry to disappoint, but our strategy remains extremely simple and boring. 90% of our monthly savings will continue going into the core of our long-term investing strategy, a global ETF, namely the accumulating Invesco FTSE World, and the remaining 10% into Bitcoin as a more speculative, high-risk investment. That's it. 2 simple investments I feel very comfortable with based on my 8-year experience as an investor so far. But that's just me personally. You need to do what makes you sleep best at night and what's in line with your own risk tolerance and time horizon. By the way, you can find my favorite low-cost brokers to buy ETFs in Europe linked down below in the description, which is a great way to support me if you'd like to. And if you're not sure which ETF to start with, you need to watch this recent video of mine. In it, I go over what I consider to currently be the best ETFs for European investors, no matter if you're looking for an S&P 500, MSCI World, FTSE World, small cap ETF or something else entirely. As usual, none of what I mentioned today was meant as investment advice. I'm just openly sharing my personal opinion based on my own experience as an investor. Thank you guys so much for watching, have a wonderful day, and until next time.